Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Well, good day, all. Ira Epstein of Linn & Associates with your metals market update for this Wednesday, and we're now at the 23rd of May, 2018, about 2:10 p.m. Central Daylight Time. I want to remind you that I have my webinar tomorrow. So if you'd like to attend it, it's at 12:30 p.m. Central Daylight Time. That is Thursday the 24th. You can click up here. There'll be an icon on if you're watching me on YouTube. If you can't find your email, the invitations, they've all been set. You can go to www.iraepstein.com and sign up. We're now 75% full already. It is free, but I have a limited amount of seating. So want in, better do something about it. So as we take a look at the markets, you can see the energy's down a little bit, and the stock market's come off nicely off its lows. Whether it's going to have a positive day or not, I don't know. What I do know is that in looking at the FOMC minutes, I was not enamored with the idea as to being hawkish as much as I was. The Fed seems to be taking the attitude that it's looking at the impact of possible tariff wars for us. It's looking at how the other world economies are doing, and it's certainly looking at our numbers, which don't appear overly hot in terms of inflation. So it's decided in the parlance of Fed speak that if the inflation rate gets over their target of 2% for a while, that's okay. Let it get up to that 2% plus. They'll take a look and see what they want to do with it. That's how I understand what they said. Yes, we have a rate hike from what I read coming in June, but it's a big boon to the idea of letting the market get hotter rather than trying to shut it off so fast with interest rate hikes. Good news for the stock market. It's not really doing all that good for gold. And the gold market, because we're at 210, I already know the settlement. And it's going to be 1289.60. It's settled lower on the day. The silver market, while it's at 1646, actually settled closer to 1640.50. So these markets, no matter what I show you on the charts, we already know where the settlements are. What we do know on the weekly chart is the chart is ugly. You've got a down thrust. Gold does not look good. If it had a big rally, I'd still expect resistance on the weekly chart back up at this 1326 level. I'm going to call the market an overall down thrust. When I take a look at the daily bar chart, we're getting a little bit of a bounce, which is fine. And because we're now at 210, not at the settlement price, which will be at 4 o'clock, you do have a pattern of higher lows and higher highs. I promise you that's going to change on the settlement price. It's going to look a little different. It'll be out of a trend. That's the important thing to understand. And as long as it's out of a trend, okay. What's going to happen is instead of this line coming down here, it's just going to go up. So you're going to have a lower low and a higher high. Knowing that helps you mentally, but I cannot change that the exchanges are adhering, for whatever reasons, to this idea that they need a 1230 settlement price. I mean, folks, most of the trading in the world is not done on those London spots anymore. They're done in the futures markets, and the biggest are right here that are trading them. So just something to let you know. I would make the change. The 18-day average is your resistance. Bollinger Bands are down here. And momentum-wise, you're oversold. So I'm going to call this market trendless. Hit a downside number it got to bounce from. The Fed wants to let inflation run a little hotter. In the GLD, now this market will not settle up until 3 o'clock. And it has a pattern of a lower low and a higher high. Even with the news it just got, it couldn't get over the previous high of 122.74. It'd be nice to see that occur. It's at 122.54 to get at least an outside day up. Right now you're getting a bounce, but let me warn you. If you take a look at all these numbers, they're staying under 20. That's bearish as can be. So I'm not seeing this as any more than a dead man bounce, dead cat bounce, you might call it. And I still see a bearish situation there. You're not getting away from much of anything on GDX, so I'm not looking for much of a rally in this market. It's trying to get back into resistance near 2248. It got to 2243. The pattern of the market, if we take a look, you got to 2201. So what we're trying to establish now is having an outside day up. You need to get through 2245 to do so. I don't know that it's going to have the power today. In the gold-silver ratio, we know we're in a bounce area. That's fine. So gold temporarily a little stronger than the silver. And you see that when you look at how silver prices are stuck at their 18-day average, but they're still in an uptrend. Higher lows, higher highs. They're not backing off from that. The copper market has been acting sick. It's reflecting, I think, the idea of China, the U.S. not quite getting its trade deals together, Europe, the U.S. in a fight. I haven't seen anything positive on NAFTA yet. I was hoping today when the president said early in the morning he's got a big surprise for the automakers. Well, if it was the Chinese lowering of tariffs, not such a big help, not such a big surprise for American automakers. Helps the Germans more than it helps us, believe me. Mercedes, BMW, big brands in China. If you look at the July platinum, lower highs, lower lows, still a bearish pattern. Notice how the market's stuck right at the 18-day average of closes. Palladium market, lower high, lower low. You have so many metals that are not trending. That's the important thing. They're just not going anywhere. And the dollar sold off a little bit on the news that maybe the Fed's not going to be as eager to kick those interest rates as it used to be. We're going to talk about this in detail, I hope, tomorrow in my live webinar. I hope to see you there. Remember, you can click up here. You can call my staff at 866-973-2077. They'll get you set up with it. And or you can always go to you can go to www.iraepstein.com/webinars. I was going to say https://. It'll get you there anyways. Have a great day. See you tomorrow.